Hello everyone, how's it going? In this video, we're going to talk about Mullen, trading under the ticker symbol MULN. Mullen is a very exciting and interesting stock to cover because of its high volatility providing opportunities and the ongoing projects that may fuel the speculations even further. At the same time, it's a company that has a hard time proving to the market that its relevance is for the long term and not just the short term speculation. In this video, we will go through the latest fundamentals, the price actions, and my analysis, as well as my recommendation to hopefully help you make the best decision possible. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links down in the description, as every help is greatly appreciated. Over the past few days, Mullen has been trading between 8 to 10 cents, which is relatively encouraging considering the very challenging situations that we have been dealing with. The trust level is relatively low, if at all, and we shouldn't be really surprised. Obviously, people are wondering whether the stock still has any relevance in terms of the fundamentals. Well, to this I would say that even if it doesn't really have any, or instead of saying relevance, I would say the weight of the fundamentals doesn't really count for much, we gotta remember that the short-term relevance is more important than the long-term fundamentals in the case of Mullen. Over the past few days, if anything, Mullen has been trying to hold on to the 10 cents level and then try to go beyond that, even to the 13 or 14 cents level. But unfortunately, it didn't really manage to make it. Obviously, without the additional demand coming in, I think it's going to be surprising to see any sort of significant push above. And no, the good news don't really count in this case. Their announcements, I think, is not going to carry that much significance until we see volumes coming in, and which I doubt we're going to see in the short term. We have waited for quite a few days so far to see whether we can have a chance of reversing just yet. But unfortunately, without the volume going above 200 or 300 million shares in any sustained manner, we have little chance to see this to be done in the short term. Now, regarding the volume, the most recent volumes have been trading around 200 million shares, peaking around 700 million on April 21st. I think that the interest towards Mullen is there, and that it has the capacity to make it to the new highs once again as long as the interest can be reignited, which it will once the stock reestablishes its former price levels. In other words, if it goes back to 20 cents, 30 cents, 50 cents, then I would say that we can probably hope is the right term, hope for Mullen to go back to $1. And this is probably the current dynamic regarding to the stock itself. In the meantime, the price of Mullen obviously fell by more than 30% over the course of the last month. It's largely due to the lack of trust and a general sensation of the market attention moving elsewhere. But so far, all the positive news have also failed to push the prices up, which really explains why these news don't necessarily have any weight in the eyes of the traders who currently trade Mullen. So I think that for the time being, Mullen is going to remain as a short-term speculation stock, and for which we can definitely make some interesting gains. One thing to make into consideration is that we are making the assumption that the stock will continue its existence and that it's going to benefit from the sector-wide catalysts. And that's why I would assume that a stock will be able to eventually bounce back from there. Doesn't mean that it's for everyone, absolutely not. In fact, it's really not even for the majority of people. However, I believe that a stock is definitely worth trying if your risk appetite is higher than average. Mullen is an American EV manufacturer that has known several different iterations over the years, from Mullen Auto Cars to Coda Automotive and now Mullen Automotive. On paper, it is one of the companies with the longest continual existence in the EV sector, way before the current giants began to blossom into people's mind. Mullen has tried over the years to gain traction by launching new products and announcing new partnerships in order to attract more capital in the sector that requires oh so much money in order to keep the ship afloat and the operations going. Does this mean that Mullen lacked the capacity to stand on its own feet? Yes. Does it mean that Mullen is so struggling to find its break-even point? Without a doubt. In fact, if anything, there are reasons to believe that Mullen is now facing challenges that are even bigger than the issues from the past. People may have stopped believing in it, and the market has questions about its long-term sustainability. I mean, for example, people are sensitive to the CEO's reputation, the nomination of his associates on the board, and that a company has developed no substantial products so far, despite repeated announcements that they have done so. These aspects are not necessarily new. What is different with Mullen this time is that even its announcements seem to attract less and less reaction from the market. And for that, we have to look at the management's past choices along with the global macroeconomic trends to figure out the causality. Mullen has had a habit of disclosing as little information as possible to the financial market, and that sometimes it even chooses to omit significant details like the identity of key partners and clients, as well as the financial health or even the existence of their key suppliers, such as the company manufacturing Mullen's batteries, which was advertised as one of the better ones in the industry, prompted its price to soar by more than 120%. Despite the fundamental and reputational challenges, there are two major elements that justify the continuing interest that people have in Mullen: volatility and short squeeze. Mullen is a small cap that is currently priced around its historical low. From a probability-based perspective, this would mean that the likelihood of the stock to go upward is far higher than to reduce from 20 cents to zero. After all, there isn't much space to go further down, whereas the logical development would be to reach higher levels when the timing is right. This would, of course, assume that Mullen somehow managed to continue its operations, or to at least maintain the going concern. This brings us back to the price volatility argument mentioned previously, whereby small caps have a tendency to experience irrational moves and sudden surges in both price and volume. If a certain number of traders decide to pull in, then from a percentage-wise perspective, this kind of price action can be very, very attractive, because a mere 30 cents increase can mean that the stock would increase by more than 100% from its cost basis. Mullen has obviously been greatly impacted by the ongoing market-wide bearishness, perhaps even more than the rest of the sector due to the lack of any substantial product in play and the absence of clear objectives. I don't mean that a company doesn't share any news announcements, but simply the fact that the public doesn't seem to take them seriously enough to reflect these in sales volume. The volatility seems, therefore, to be random for the most part, with some correlation to be predictable with Nasdaq recoveries and the conversation trends in online discussion. These online discussions are one of the keys to really understand what makes people buy or sell Mullen. Since retail traders are by far the biggest category of Mullen shareholders, these decisions often happen on a whim, with the assumptions that the stock may have massive redemptions in its short seller ranks, whether there seems to be a lot of tractions on a specific topic, and if there seems to be a sudden uptick in the number of conversations surrounding a specific topic about Mullen. These are highly random, or way too unreliable to be a determining factor, or so it seems. But if you think about it, how do most retail traders make their decisions? Is it really the fundamentals, the long-term tendency of an industry? When we're talking about Mullen, a small cap with doubts that they have more hustlers than genuine entrepreneurs? I mean, really, can we really tell whether the announcement of iGo in Europe would create a massive spike in the beginning, but barely any reaction when they actually began distributing? Or perhaps more telling than these two cases is the fact that MULLEN share price tumbled by 60% shortly after they announced that they have managed to reduce the company's debt by $13 million, which is huge for a company of that scale, increasing greatly the company's likelihood to survive. But with all those announcements, I haven't really seen a logical reaction. And possibly because the focus is not dictated by logic or any sound business analytics, but by online chat rooms and forums. Therefore, I think that a key factor to take into consideration when trading MULLEN is to accept that we are here as short-term speculators on a wobbly stock, hoping that there will be sudden price jumps to justify a participation in the equity. The overall impression regarding MULLEN is that it is a company with clear tendency towards speculation, with large potentials of profit in terms of percentage, and mostly relies on irrational factors to boost the share price. Given the current circumstances, I would definitely recommend to buy MULLEN shares at 10 cents and to hold it for a rebound. The maximum exposure should be kept within 1% of your portfolio's capital.